Bitcoin has seen yet another correction from 28k, breaking down from a short-term rising channel formation. Will Bitcoin continue toward the downside moving into our upcoming economic data, or will the bulls reclaim control? Let's go ahead and jump into the video. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be discussing the recent correction from 28k, what it means from a technical and structural perspective, and where Bitcoin is likely to go on the high time frame and even on the small time frame charts. We'll also discuss the recent and upcoming economic data and the possible impact that this data could have on the cryptocurrency and broader markets. Before we do get into it, smash that like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant economic events. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the third link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and, of course, the relevant economic news. If you are interested in trading, you can join our trading channel. This is our VIP group. We post trading signals for altcoins, for Bitcoin, and for Ethereum. We post exact setups of charts, justification, exact entries, exact exits, and exact stop losses. If you are interested in joining that, you'll also get access to our group chats. There are 6 group chats: the general chat, the trading chat, and education chat, our help chat, our news chat, our video chat, and our trade setup chat. If you're interested in getting access to all of that, you can see this month already, we've had massive profits in the VIP. Here's some profits from the last 24 hours. We've had 9 trades. Every single trade so far has been a win. If you're interested in finding out more information, go to our pinned comment in the free channel, click the membership information or the trading track record link. You can find all of our trades, over 79% win rate, over 755 trades in the VIP for over 2+ years. So go ahead and contact me to join. Let's go ahead and jump into it. So starting on the market data, guys, let's go ahead and take a look. Market data for today, volume is up 3.3%, sitting at 56 billion. 24-hour liquidations are down 26% at 46 million. October is still ever so slightly in the green and is up 1.7% for the current month. Moving over to our volatility index, we can see on the 60-day period, the volatility index is very slightly ticking upwards, and on the 30-day period, we can see we have a little bit of a spike on the volatility index, but again, pushing more or less sideways. Overall, volatility is still quite low, and again, while volatility is low, this could be an indication of weakness. Moving over to these liquidations, of the 24-hour liquidation total, we can see 32 million came from those long positions, as Bitcoin saw a expected but pretty nasty rejection from 28k, and furthermore, a breakdown from a short-term rising channel formation. If you watched yesterday's video, we were telling you from this point over here, we expected a move up to 28k, where we then expected a rejection. So we saw that play out perfectly. If you talk shorts over here, in this range, again, your stops would have been over 28, so perfect. If you took shorts at 28 in this range over here, as talked about in the video, again, massive profits. Either way, we definitely played that very well. We'll be coming back to this in just a moment when we discuss the short-term price action. Moving over to the DXY, the DXY has again still remained within this rising channel formation. And we'll say it again, as we've been saying for weeks now, the rising channel formation is a uptrend. However, with all rising channels, they do eventually break toward the downside, meaning they eventually will break this uptrending support line. And when that occurs, we will likely see a rejection. The question is, how low will the rejection go? Will it be enough to create a massive downtrend, or will it be a little bit of a hiccup in the overall uptrend? So let's go ahead and take a look. The measured move analysis prior breakdown would take us to around this 103 to 104 zone. If we do break down, that would remain quite bullish for the DXY. Again, for the DXY to continue upwards on the macro scale, we are going to have to break through this 108 to 109 major high time frame resistance. If we get above this level, it is pretty much going to be over for the bulls and the prices for assets are likely going to drop quite aggressively. Watch out for that. In the next 24 hours, the DXY movement may be a little bit sporadic as we do have some major upcoming news. We of course have our NFP data and our unemployment rate data, both of which are massively leading pieces of information for inflation. If we see inflation rise, and we do have inflation data come out in about 5-6 days, okay, we could potentially see the probabilities for an interest rate hike to rise as well. And if we do see interest rates rise, we know already the dollar rises in strength, okay, and assets in comparison drop in value compared to the dollar, and asset prices generally fall as the market risk increases. So the quick correlation between all of this, to sum it up really quickly, guys, if we do see data come out indicating, okay, leading data such as NFP, such as employment data, indicating inflation is rising, that increases the probability that we will see interest rates rise again. Remember, as of last month, inflation is back on the rise. If we take a look at our inflation and interest rate curve, what we saw was inflation plateaued, and then inflation has jumped up. We know interest rates are lagging about 3-ish months to inflation data, meaning if we continue to see inflation data ticking upwards, we are likely to start seeing the interest rates follow suit in a couple months. And of course, if we do start to see that happen, that systematic risk in the market, okay, starts to move upwards, and all of a sudden, the risk trade-off for your assets start to decrease. The estimated return in comparison to the systematic risk decreases in favorability, and thus people are less likely to invest. People are drawing money out as cost of debt rises, and yada yada yada. All this other stuff happens. We're not going to get into it. That causes asset prices to either drop or reduce their overall growth rate, and this could be potentially bearish. So we are keeping in mind in that. However, it hasn't happened yet, and therefore it is too speculative to say this is going to happen. If we do see inflation go back to neutral or drop, it's actually going to be very bullish, okay? If inflation continues upwards, however, and we don't see interest rates rise, that as well is actually very bullish for asset prices, okay? So we do have to see the interest rate rise for asset prices to become, you know, under the pump. We do have to see the expectation for interest rates to rise for asset prices to kind of feel that heat, okay? So keep in mind in that, watch for it, you know, keep the back of your eye on it, you know, don't really pay too much attention, don't weigh out too much, but definitely something to not basically forget, or definitely something to keep, you know, at least one little eye on. Let's go ahead and discuss the broader market. So real quickly, the S&P 500 and the Dow Jones are looking pretty grim. Of course, S&P 500 has failed to get back above that daily candle above this resistance. Therefore, we are in a start of a downtrend. We are underneath this uptrending support line. Again, the measured move target of this is going to be a 13-ish% correction, or 12% correction to the downside. We are looking for this range as a final target, okay? Again, if you've been following the channel, we have been bearish ever since over here. We've expected a sell-off. We've seen that breakdown. First target has been hit. Our second target is POC. Our third target is down over here. So keep eyes on it. Keep watching it. Again, if inflation data comes out bullish and interest rates do not start rising, we could see a little bit of a pump if the DXY drops. However, I would expect this to correct further as we are underneath resistance, and resistance is resistance until it is not. The same goes for the Dow Jones. However, Dow Jones is much further ahead in that path, having already reached that second target. Let's go ahead, guys, and jump into Bitcoin. So I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. So as you can see, Bitcoin has rejected again a second daily candle attempt at that 28k level. That 28k level now has been retested 3 singular times. We tested it over here, we tested it a few days ago, and we tested it within the last 24 hours, rejecting every single time. Again, what is Bitcoin currently doing? We are currently moving within a massive range. The range is between 32,000 and 24.4. Okay, that is our huge range. The 28 to 28.4 is essentially the mid-level, the midline of this range, the trigger point, the buffer point between a continuation upwards or a rejection and continuation downwards. If we want to see a continuation lower out of this range, okay, downwards, we need to see momentum flip negative, and therefore we will have to see the RSI drop below this trend line prior to the price action breaking above and reclaiming 28.4k. So if we reclaim 28.4k, the price is very likely to continue upwards to 32k. Until then, resistance is resistance until it is not, and expect your pullbacks, expect your rejections, as we have been doing so. So 28.4k to 28k is very important. Let's quickly discuss on the weekly chart why that is the case really briefly. So we take a look at the weekly chart over here and bring up some of our indicators. We do obviously over here have we'll go ahead and bring up our titles really quickly. We can see a little bit better. We have our 50 MA, which is the red line. We are above the 50 MA, so we're showing a decent amount of strength over here. However, it is not enough strength to really flip the trend. We are testing the upper level of the bull market support band. The upper level of bull market support band is exactly 28,000. That is the point we rejected on once again on this daily candle. And of course, the 28.4k level is represented by the Gaussian channel upper band. So we have this little cluster between 28 to 28.4, which we absolutely need to break above to continue upwards. If we get rid of these technical levels and just go ahead and bring up a standard daily bar chart and draw in that level, if we draw in that 28 to 28.4 level, you can see right over here, when we broke above it the first time, okay, we saw a significant surge in strength, pushing us right up to 32k. Then we broke below it. Where did we go? A significant correction right down to 25.2 to 24.4. Again, this here is the upper range. This here is the lower range. Do you see how that 28 to 28.4 level played as the trigger point for determining where the price would move towards within the higher time frame range? We saw that correction. We saw a continuation to range low. We saw the breakout. We saw a continuation to range high. We expect this kind of trend to continue, right? We see a breakout. We expect a continuation to range high. We fail, we reject. We expect a continuation towards the range low. And that is kind of what is happening with the price action right now. So we know now 28k is of utmost importance. We also know 25.2 to 24.4 is very important as it represents the Gaussian channel midline. If we fail to get above 28.4 and instead lose the RSI trend line, breaking down towards 24.4 to 25.2, we will have in turn lost the Gaussian channel midline. Every single time we lose a Gaussian channel midline after remaining above the channel, so once we've pushed above the channel, which we have, broken back into it and then lost the midline, we almost always, it's about a 90% accuracy on the high time frame, break through the lower band of the Gaussian channel. I'll show you again another instance, okay? I'm not going to use a COVID crash. We'll come back and talk about this instance over here. We push above, we break through, we lose a midline, we break below. Even if we go down to a daily chart, we'll show you how accurate this is, okay? We break above, perfect. We're sitting above the Gaussian channel. We break in, we lose a midline, we break below. We'll show you again. We're above the Gaussian channel. We break in, we lose a midline, we end up breaking below. So again, guys, if we go back to that weekly chart and apply the same logic, if we do fail to get above 28.4, if we break down on the RSI and have that negative momentum shift, we are likely to lose the Gaussian channel midline. If we lose a Gaussian channel midline, wherever our chart is, we are likely to see a correction sub lower band. That will take us to around 21k and under. Again, very, very dangerous. If we go back to this daily chart, we can see, guys, we have a huge gap right below 24.4 all the way down to around 20k. This gap will likely be filled if we do fail to break above. And that is what I've been saying for the last few days. 28.4 is really one of the most important levels on the chart, because if we break through as range mid, we push to range high, and if we retest range high with the strength that we will, right, we'll have all this strength pushing into it, okay, we'll have all that strength pushing into it, we will likely continue all the way upwards, potentially even breaking through 32k, pushing to 48. And again, how can we say that? Well, if we look at the high time frame charts, guys, and we head over to the monthly chart, when we break over 32k, which is going to our horizontal red line over here, we can see monthly candle closes above those prior horizontal red lines result in a large move towards the dotted trend line. A large move toward the dotted trend line, and again, would expect a large move toward the dotted trend line. The dotted trend line is simply the high point of the dead cat bounce of the prior bear run cycle. So 28.4k is an incredibly important level for the 50th time in this video in determining the likely macro trajectory of price action over the coming weeks, if not the coming months. So do not underestimate it. Resistance is resistance until it is not. If a very strong level of resistance such as this breaks and becomes support, support will be support until it is not. Let's go ahead, guys, and wrap up the video on these small time frame charts. So if you've been following the channel and you did watch yesterday's video, or you've just been paying attention really, we did expect that move to wipe out these late shorts. If you watched all of our videos, we took shorts up over here, okay? We expected the price to drop to 27.2 to 27.3. We saw that play out perfectly, big tick for us. Then we expected late shorts to be liquidated and late shorts to be squeezed. We expected a move up to 28k. We saw that move up to 28k, and then we expected a rejection from 28k, and we saw that rejection from 28k. What we are seeing now is a current breakdown of a short-term rising channel formation. The rising channel formation is, of course, this one over here. We have 0.1, okay, 0.2, 0.3, 0.4, and we don't have 0.5. So we have 2 on one side, 2 on the other side. So it isn't a typical rising channel formation I would like to trade. I did, of course, short this resistance, but I took profits around this range over here. It isn't a typical one because I personally look for 5 points. That is not a rule you need to follow. That is my own personal rule when identifying and validating structures. However, it is still a rising channel formation because we have now seen that breakdown and those levels have been respected. If we take a measured move from a rising channel formation and apply it to the breakdown point, we can see the breakdown target is going to be about $27,000. If we look out now and zoom out to the higher time frame on a 4-hour chart, we can see we are actually moving within a high time frame rising channel. This high time frame rising channel, we have 1 point, we have 2 points, we have 3 points, we have 4 points, we have 2 over here, we have 2 over here. We are expecting a 5th point down on the lower side. Therefore, we are still expecting a correction down to around 27,000, and the short-term structure validates and tells us, well, the measured move suggests we could go lower. This is a target according to the high time frame structural levels, and of course represents as confluence on the high time frame horizontal level, and thus this would likely be a target for a pullback. If we reach this level, this is going to be an incredibly important level of support. According to our structural analysis, we will have completed a rising channel formation. The probability of a bounce from here that would push the price over 28k is actually very slim. So we want to get above 28k, we have to do so before retesting 27. So we retest 27, we're likely going to flip negative momentum, right? The RSI will likely break down from this point. We're going to see a negative shift in momentum that will drive the prices lower. If we take a measured move analysis of this channel and apply that to a perceived breakdown point, you can see that takes us down to 24.3. 24.3 is going to be sitting underneath the 24.4 level, but more importantly, 24.3 is also sitting underneath the Gaussian channel midline. So you can see how the dominoes are lining up to be knocked down, and the bulls, well, it's not looking very good for them. And I'm going to be honest with you, like I always am, the charts are looking quite bearish. That's just how it is. until we get above 28.4, we're not looking very good. We're just simply not, okay? On the shorter time frame price action, we do have a possibility for a small bounce. And again, let's take a look at that really quickly. So we'll go down to a 5-minute chart, and we have this little bit of a consolidation. Not looking too good, but at the same time, we'll discuss it anyway. So what we have seen, a 28k rejection, we pushed down, volatility surged. We saw a surge in volatility as the price distances itself from the 50 MA. We then have seen a little bit of compression. We've seen the price kind of move along the 50 MA, representing consolidation, representing decrease in volatility, representing compression. As you know, anytime we have a compression after an expansion, we generally see an expansion. So we are expecting a large, well, relatively large in comparison to the recent price action, not 10%, maybe 0.5%, 1%, move pretty soon, guys. We're expecting a pretty decent sized move in retrospect compared to the current price action relatively soon. So let's take a look at this channel. We have a possible channel forming right over here. So we have our range lows, we have our range highs, and we have our mid ranges right over here. We do know this uptrending diagonal trend line is going to be acting as a resistance, and therefore if we do break above this level, we are expecting a move to retest the confluence point between this high point, okay, this high point at around 27.6 and the uptrending diagonal. I'd be looking for new shorts on Bitcoin if that level is reached. On the flip side, if we break toward the downside, I'd then be looking for a drop right into the 27.2 to 27.3k level, where then if we lose, we will continue toward the downside as per the high time frame analysis, okay? The short term is suggesting the bears are still there. They're losing a bit of strength, but that is because the bulls are kind of starting to enter in, starting to take some longs. The price is consolidating. I'm not really expecting too much. Watch that trigger point. Watch that RSI. We see momentum flip negative within this sideways channel. We are going to be pushing lower. Okay, guys, I'll wrap the video up there. I hope you have a great rest of your weekend and day, of course, and I'll catch you guys in the next one. Actually, what day is it? I think today's Friday, so I think I'll catch you guys on Sunday for our next video. Cheers, and I'll see you then. Make sure to check out the Crypto Academy courses. It is the link down below. We teach you guys how to trade if you're interested in learning technical analysis and learning how I analyze charts. That is a starting point for you. If you're brand new to the trading, if you're brand new to analysis and technical analysis, that is going to give you an awesome foundation to develop your skills over the coming years. Thanks, guys. See you guys tomorrow. Cheers.